My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, boys and girls. It is another episode of the Property Profits Real Estate Podcast. Today, zooming in from beautiful Utah, we have a very experienced real estate investor, Josh Green. Josh has done a lot of stuff in real estate. He's worked for some big multifamily companies. He's done development deals himself. He does a lot of infill type developments and townhouse build outs. He's in consulting. He's also in land development. He knows quite a bit about raising capital for syndications to do these development type deals. And today we're going to be talking about what he's up to these days, because the whole market, as everyone knows, mid 2025 is in quite the flux. So we have to be flexible. We have to weave and dodge and bob and all that kind of good stuff, and make the best of challenging times. So Josh, welcome to the show.
Thank you so much for having me. Your list of guests is impressive. I'm honored to be here.
Well, thank you very much. I'm glad you're here as well. So tell me a little bit about you and your company, Alchemy Development. So what do you guys do? We're the middle of the year, 2025. What are you focusing on primarily these days, Josh?
Yeah, I'll back up a little bit. My experience and background is in multifamily appraisal and consulting. And I did that for about 11 years, all over Utah and kind of surrounding states, Idaho, Montana, Wyoming.
All those pretty ones.
All the pretty ones. Yeah, no, it's a great place to be. Yeah. I got kind of burnt out on being an appraiser, but I loved the consulting side and working with developers and wanted to
What was challenging about appraising? I've never come even anywhere close to it, but what kind of burnt you out on that, Josh, if you don't mind me asking?
It's kind of a grind, and it seems like no one's ever happy with the value that you give them. And so it's a lot of work. It takes a lot of time and education and testing and stuff to even get licensed, and then it's just kind of a grind.
Nobody's ever thanking you for your job. It's
exactly
that people'd rather
it's the
not
opposite.
pay.
Yeah.
I hear you.
So half of that business was consulting and working with developers and really kind of digging into the market analysis, recommending highest and best use, down to number of units, unit sizes, product type, all of those things, and giving developers kind of a business plan that was market supported. And I really like that side, the creative side of trying to create something, and decided I wanted to try to go more that route. So the University of Utah has a Master's of Real Estate Development program. I did that as a student. I teach a couple classes up there as an adjunct now. I got recruited when I graduated to go work for a local infill developer. I did that for about 4.5 years before deciding to go out and try to do it on my own. And to your earlier point, in retrospect, it was probably the worst possible time for me to make that decision to go out on my own. There was a lot of challenges, 3-4 years ago. And like you said, I mean, things are changing again now too. So.
Mm-hmm. Okay, so fast forward to today, what do you focus on primarily with your business these days, Josh? Are you doing some developments? Are you doing some land deals? Are you consulting? What's kind of the day-to-day for you?
Yeah, there's kind of three, I guess, pillars of my business. One is development. I love townhomes. I love building infill townhomes. If I can do it, make the numbers work for rent, that's the preference. But we've also looked at doing for sale deals.
Okay, so have you done some of those? Have you done some infill? Yeah. Nice.
Our first one under my own name, under my own brand company. We're just finishing up construction right now and leasing it up, and so that's been really exciting and stressful.
So is it a number of them, or is it how many units are in this development?
It's 20 units in
nice.
This first phase, and then we have another 16 that will start later this year, right next door, a second phase.
Exciting.
And then we've got another project that will be another 24 units that will start hopefully here pretty soon.
Well, that's exciting stuff. So are you in the build to rent business, or are you going to build these out, hold on to them, rent them out, all that kind of good stuff, or what's the plan? What's the exit strategy?
Yes, yep, that's the plan is we build them, stabilize them, if it makes sense, with rates and stuff to refinance and return some of our investors' capital. We'll do that, and then eventually we'll sell them to a regional investor just looking to buy something for cash flow.
Okay, cool. All right. And what do you think the hold period is going to be for that?
We talk to our investors about kind of a 5-year timeline
Yeah.
from when we start construction to when we sell the asset.
Nice, 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 nice. Okay, well, that's exciting stuff. So that's the first pillar. What's the
Yep.
next one?
I still love consulting, and so I still do a fair amount of that. I work with a lot of contractors that maybe have a piece of land. They know how to build something, but they don't know how to underwrite it. They don't know if it's a good deal, and so I can come in and help on the underwriting. And I do a lot of market studies for developers and home builders. Um, so that's kind of the second piece, and then the last piece is I love teaching, and so I mentioned I teach a couple classes at the University of Utah as an adjunct. I absolutely love that, and I'm just kind of rolling out the first of hopefully many courses that I'll just be teaching on my own
Oh, that's
in real estate underwriting. So
well, it's exciting. It kind of combines everything, and you sound like a good entrepreneur. You've got what we call entrepreneurial ADD.
exactly,
It's hard to kind
yes,
of focus on one thing sometimes.
yep.
Very cool. So we were talking a little bit off camera there, Josh, that it's challenging times right now for the development business. Talk to us a little bit about that. I mean, you've got your first one, you know, pretty much done,
Oh,
20
there,
units.
yeah.
That's exciting. What do you see as being the challenges for the next phase and the next project that you've got in the pipeline?
Yeah, luckily for our pipeline, we bought these properties years ago, and so we've got a good basis to begin with in the land.
Yeah.
Um, and we try to underwrite pretty. It's again like my appraiser background, right? Like, we try to underwrite a little conservatively and not kind of shoot for the stars. And so before we even bought the land, we underwrote them that way. And anyway, we should have a fair amount of wiggle room to make these deals work that they're in our pipeline currently. Now, as for finding new opportunities, that's where it's been a challenge.
Mm,
It seems like landowners still, they want absolute top dollar for their land, want you to close fast. At the same time, there's interest rates and cost increases. And what I've noticed even just recently with townhomes that are built for sale here, at a certain price point, they're just not moving. I've got some friends that are sitting on good sized projects and they haven't been able to sell any of them. And
wow.
so that's made me nervous. We just backed out of a deal the other day that we had under LOI. Really because of that, we started digging into, okay, what will these actually sell for? How long will it take to sell them? And it just made us really nervous at
So
those.
you're looking at a deal that was already developed, or you're looking at a piece of property to develop for build to sell?
Yes, a piece of property, an infill property to do 10 townhomes that we would have sold as individual townhomes.
Okay, and it didn't make sense to maybe do that one and hold them as built to rent?
No, it's hard to make a for rent deal work unless you get to like a certain scale. And
Mm,
for us, that's been about 20 units is where it starts to make sense to do for
okay,
rent. And anything smaller than that, we look at as being for sale as individual units.
got it. All right, so the market's pretty calm these days. There's not a lot of demand for these kind of property, which is interesting, right? Because there was so much screaming demand not very long ago, it seems to be, and now it's just kind of flattened right out.
It's kind of counterintuitive. So these units I was talking about, they're priced, in the low 400s to even sub 400, which for Utah is what we would call affordable, right? That's kind of
Hmm.
first time home buyer kind of pricing here. But I think people in that that income band are so sensitive to what their monthly cost is, and it costs so much more for them to
Yeah.
buy a townhome than it would for them to just keep renting a similar, brand new townhome that's for rent. And so that gap between for rent and to own is just huge. And those potential buyers in that kind of price range are just really sensitive to that increase in monthly costs.
Well, that bodes well for your build to rent model then, doesn't
That's what we hope. Yeah, yeah.
it? Hey, I was wondering, Josh, have you ever looked at approaching property sellers? You know, you mentioned that they're kind of out to lunch still with the pricing. Have you ever proposed to any of them, hey, let's do a joint venture and you bring the land and we bring the development and the capital and we kind of figure out a, a split that way?
Yeah, I would love to have a deal work out that way. And anytime we're looking at a piece of property, I always ask that question,
Mm,
like, do you need to sell or do you want to stay in this deal and maybe make a little bit more money? I haven't done one yet that's structured
mhm.
that way. But yeah, it's always on my mind and I always ask that question
Very
if
good.
someone's
Yeah.
willing to kind of stay in it and work with me.
So Josh, you're just wrapping up your first build out with the townhomes. That's very exciting. That must have required a lot of capital. You must
Yeah.
have had to raise quite a bit of capital to do that deal. Do you mind walking us through how did that work, seeing that that was kind of your first flagship deal under your own brand, under your own name? How did you get people on board without a track record, so to speak? You did have a track record,
Yeah.
but yeah, how did you translate working for somebody else to your own thing?
Yeah, really good question. And we made things really difficult for ourselves on that first one. We picked a market that's kind of a little bit out of the way that has really good growth fundamentals with population and employment. There's a university there, but it's a little bit off the beaten path. And so that was kind of the first hurdle we had to deal with is really telling that story and letting people know what the opportunity was there. The second one was just like you mentioned. The team had years, decades even combined of experience working for other people, but we hadn't really done one on our own. And so
Yeah.
our investors, they put a lot of trust in us to execute on this one. And so yeah, that was a hurdle for sure. And like you said, it did take a lot of capital, a lot more than I have myself. And so we set it up as a syndication. We went out to kind of friends and family and accredited investors and
Mhm.
raised about $4 million
Wow.
in equity
Congratulations.
to
Yeah.
go build this project. And kind of to your earlier question, for sale versus for rent, it takes a lot more capital up front to build something for rent because the financing is different, and
Mm.
you're lucky now to get 55% of costs, 60% of
Really?
costs
Wow.
just with where interest rates are, the lenders are looking at their takeout, and so and sizing their loans to what will be able to take their construction loan out with. And
Okay.
so it ends up being, yeah, I mean, really low leverage, which is difficult on one hand because you have to raise more capital, but on the other hand, it's nice to not be so over
Yeah.
leveraged,
You're not paying out so
Yes,
much in interest and that sort of thing.
exactly.
Okay. So once the smoke clears, it'll probably be could even be better for you.
Yeah, I mean, I really hope so.
Yeah. Exciting stuff. Well, so Josh, we're kind of halfway through this year already. What are your plans for the next 12 months? Where do you see your company going over the next year or so?
Yeah, great question. And kind of because of some of these things that I'm seeing with the market, um, I've really been shifting recently to focus more on land and less on actually ground up, building townhomes or whatever it is. There's just a lot of risk in that, and the margins are so thin right now with where costs and everything is, interest rates,
Mm,
everything. But there's still big demand from home builders for lots. And so a lot of what I'm looking at right now is, can I go in, get something entitled for a, 20, 30 unit subdivision and sell either paper lots or finished lots to a home
mm.
builder. There's high demand for it. It's less risky than, taking on a big construction loan and, guaranteeing the loan and all those things. And so that's where my focus is now is less on finding projects for myself to build and more finding projects for my builders and other developers in my network to go build.
Oh, exciting. That makes sense. And yeah, it kind of ties beautifully into your wheelhouse, that's for sure. Josh, if people want to connect with you and find out more, especially on the consulting side of things, just remind us, who do you kind of provide the most value for? Who do you work with when you're doing your consulting business?
Yeah. Kind of across the board. So I'll work with, individual investors that have a deal they're looking at, and maybe they're not sure how to underwrite it, or, if it's a good deal or not. And so I can help with kind of underwriting, financial analysis, financial modeling. I do a lot of market studies. So working with other developers that, I just finished one up for a developer that's doing a big master planned community. And so I looked at that opportunity and recommended, unit mix, different sizes of lots and different product types based on kind of the market analysis. So yeah, kind of across the board as far as clients.
Nice. So if people want to connect with you and find out more, where should they go?
LinkedIn. Yeah, I'm pretty active on there. I try to post a lot of educational things and about what we're doing here, things that I'm seeing. That's by far the easiest way to get a hold of me.
All right. So there might be two or three Josh Greens on LinkedIn. How do they know you're the right one?
Mine you'll see when I come up, it says I love townhomes.
There you
That's
go.
the easiest way.
Josh Green in Utah, and he loves townhomes. Josh,
Yeah.
thanks for being on the show. It's been a lot of fun.
Yeah, thanks for having me.
All right, everybody, take care, and we will see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.